Good morning, good evening, good night, wherever you may be watching this transmission. Man, do I got a doozy of an article from you guys. It was from yesterday from Yahoo Finance. And it's Yahoo Finance Canada is posting this about Australia's low interest rates. Now, why are they posting this in Canadian news sites? Well, they're starting to catch on to the correlation in the Commonwealth, what I've been talking about for the last decade, pretty much. The patterns. The overpricing of homes, the artificially low interest rates, the market rigging, the foreign investing, the money laundering. Well, patterns are all the same across the Commonwealth because they are open for business. Commonwealth countries are competing for rich investors from China to come and prop up our economy. Anyways, Australia's low interest rates could be doing more harm than good. Oh, yeah. So this is a good one. It's from Bloomberg, of course. Source of Bloomberg. Explore what's moving the global economy in a new session of the Stephanomics podcast. Okay, all right, let's move on here. Australia's monetary policy easing has driven interest rates down to levels where they could be doing more harm than good for the economy. If the economy is doing good, you raise interest rates. That's just plain algorithmic movements. If you left the computers and everything on autopilots and humans can't touch, we would have crashed 3 times already in the last 10 years. Maybe 4 times. That's how bad it's been in the last 10 years because this economic turbulence we're going through right now is a disaster. The central bank could be bumping up against the reversal interest rates, a level which accommodative policy begins. Accommodative. I like how they use this language, you know. Accommodative policy begins to produce unintended consequences. The clearest sign is that the slide in consumer sentiment since the Reserve Bank began lowering rates in June, particularly after ensuing July and October cuts. So consumer confidence is down. So what do? Lower rates so you could borrow more. So you got your little what do you call those cars? Your little Austin Mini driving around town. You're a courier guy. You got your little packages in there. You could handle this in a day. You're fine. But then you upgrade. They lower interest rates. So you don't buy. I'm just saying the economy changes. So you go from your little Austin Mini driving your mail around town and parcels around town for people. So now that you want to get bigger, you borrow more to expand your business. You see prosperity outside of your own town. So you buy a minivan. Okay, minivan's doing well. You're growing beyond belief. So they're going to give you more room. So you buy a cargo van until you buy a Freightliner. But you're borrowing more to just carry more. You're just carrying more is all you're doing. You're not paying down the initial debt. That the first car you had, the Mini, that got you by good, that paid your bills and got you around town and delivered your parcels was doing well. But you wanted to step outside because lending was cheap and you could expand and keep growing and adding more. And basically, the correlation is your truck from your car doing well, living in small means and living in within your means, you went all the way to a Freightliner. For what? It's against the backdrop of economists and money markets predict Governor Philip Lowe will pause Tuesday and keep the cash rate at 0.75 points. Most people equate interest rate cuts, particularly when you're already at record lows, as an indication that something is going wrong. That's exactly what it means. That may not be quite what it is. Yeah, it's borrow more. But clearly there's a message. Says Michael Blythe, of Commonwealth Bank of Australia, it makes the typical household more cautious, so you're less inclined to spend. I don't think so. People start getting increases on the credit cards. Well, your rate went down, so we're going to just give you more to pile on top. I just did an article right now on my show that basically Canadians are piling on more debt. More inclined to save. So you're not getting the positive impact that you'd hope for the rate cuts. Okay, so in Australia's case, you're more inclined to save. That means some people will start eating again. Some people will start digesting and eating food again. That's what it means. The RBA's conundrum, I love these words, I never use these words, is that it has to keep pace when major counterparts such as the Federal Reserve's ease policy. Otherwise, the Aussie dollar would jump and damage exporters. Major export out of Australia, iron ore. Australia isn't producing anything, and anything that is being produced, it's being produced by private Chinese factories and private Chinese mines and stuff. Lowe received some relief last week from Fed Chief Jerome Powell. Signaled he's on hold after cutting 3 times, the same as the RBA. That's the Reserve Bank of Australia. The currency was trading at 69 cents US cents on Monday, but a cent below its level in June when Lowe ended the 3-year rate pause. His fellow board members, Ian Harper, returned fire at critics at RBA's renewed easing, pointing out that the annual economic growth is 1.4%, about half of the speed limit, and the jobless rate is about 5.2%, well above the estimate of full employment. Now, is Australia quantitative easing? Of course they are. Why? You're telling me nobody's defaulting on mortgages in Australia? Nobody's defaulting on credit cards? Nobody's defaulting on unsecured debt? Well, I believe they're secretly quantitatively easing in Australia. They make some talk about it. I don't believe the bank overnight rates close even every night. I don't believe that. The overnight rate's very simple. The overnight rate is set to an amount, right? And they have to have X amount of liquidity in their vaults for overnight. I believe, in my heart of hearts, what they usually do is borrow from other banks at a small interest rate if they don't have enough to cover their spread. Basically, that's what I'm trying to say. Now, I believe that the government's been injecting in Australia too. A lot more than what they're making it to be. Because I don't believe the overnight rates right now in the Australian bank or banking system is being honest with its people or transparent. Because I believe that there's too much defaults happening and they're keeping it, the media is doing a phenomenal job of keeping it a secret down under. Okay. Meantime, while nation's major banks have been passing on most of the RBA's cuts to depositors, they haven't been passing on much to borrowers, further blunting the impact of the central bank policy. Okay, remember I covered this? Okay, in the United States of America, the rate goes to 2% or something. Everybody runs to the bank the next day and refinances their mortgages. But in Australia, the rate goes to 1.5%, okay, arguably. But the bank rates are still at 4.8, 4.5. No one's being helped. You see? The banks are being helped. Right? And that's why they're doing the 10K cash ban in Australia, because of this. Meantime, while the nation's banks have been passing on, For Blythe, who has access to reams of financial data as chief economist at the nation's biggest lender. I don't believe any of that financial data because, especially from Australia, because they're not giving anybody numbers. Ben, they aren't even allowed to tell people how much they sold a house for there. They make a big deal. It's all covert there. Further evidence is found in Pau City of mortgage holders using the RBA's cuts to lower their monthly repayments and free up cash rather than spending, he said. They're opting to put an additional funds into debt repayments. I talked about this on Mike in the Night on Saturday night. I'll leave a link at the end of the show if you haven't seen Mike in the Night on Saturday night. We talk about wealth rebuilding or building wealth. Another sign of negative confidence effect is that the government tax rebates to households are being banked or put into the mortgage. So anything that's supposed to go back into the economy for you to go buy your blender and your microwave oven goes back into the mortgage. So people are just on this treadmill of uncertainty. Supporting that thesis, retail sales advanced a measly 0.2% in September, just half the estimate of economists. And volumes actually declined 0.1% in the third quarter. Indeed, retailers at present seem to be only keeping afloat on the back of high population growth. Again, a lot of countries, well, countries are companies now, thinking in the back of their minds that raising the population level is going to help build the economy while they're dreaming a pipe dream. One area where cuts are working is property. With prices in major cities rising again after a 2-year slowdown in October, prices in Melbourne surged 2.3%, the biggest monthly gain in almost 10 years. Indeed, since bottoming in May, they have climbed 6% since Sydney isn't far behind, jumping 1.7% last month and rebounding 5.3% since May. Given the urgency of encouraging consumer spending, households feeling a little wealthier from higher property prices is fine by low. Again, people have been rich on paper because their property prices spiked. People that bought at the right time, and then when the foreign investing came in and countries started competing for wealthy investors, then that is, before that was the time to buy. If you bought at that time, you're fine. As long as you didn't tap into your equity, as long as you didn't borrow and all that stuff, you're fine, right? Lower interest rates do push up asset prices, and higher asset prices are supposed to encourage more investment. Nobody buys at the top unless they're out to lunch. And there's a wealth effect. What? So they expect people to lose? Is that what they want? And where's the wealth effect? And people spend a bit more. He said in response to question the following speech in Canberra last week. So that is part of the transmission mechanism. Is it a problem? I don't think so. I think it's a huge problem with banks, basically, banks creating wealth and basically not covering their own nut. They can't set their overnight rates. I know these banks can't set, because I remember specifically, I read an article that New Zealand banks and Australian banks, and I read it for you guys, need to keep a reserve of X amount that's out there, and they don't have anywhere near enough. So when night comes and the banks can't, I guess, cover the defaults, their overnight rates, so they gotta figure something else. They gotta borrow from other banks, but no other banks have that either. So this is a really interesting scenario Australia's putting itself into. The money printing, the stock buybacks in the markets there. I see Magellan. I was looking at Magellan stock. It's like this. No. And it's everywhere, and I'm grateful. Like I'm not carrying any debt at all, and I am extremely grateful to that. So this is it, guys. This is what's happening in Australia. They're saying, basically what they're saying is basically, like I said before, the younger generation is accustomed to debt. The younger generation doesn't deal or doesn't feel fear of being in debt like the older generation did. Younger generation, they're in student loan debt. They buy a blender on their credit card. They buy everything on credit. So they're accustomed to this. So being in debt for a younger person is actually it's normal. So they're massaging people into believing that it's okay to be in debt. The young generation is accustomed to it. It's a normal thing. I'm never going to put myself into debt for anything. Ever. I was looking at buying something the other day. I'm like, I'm just going to save up for that 6 months and I'll buy it free and clear. I'm not going to put anything into debt. Anything. The other day, I had a credit card for $800 from Home Depot. I got the bill. I'd be like, oh, I gotta wake up early so I pay that bill. I gotta wake up early to pay that bill off. $800. Oh man, what if it defaults? Oh, that. I just got the bill yesterday, but I'm having this nightmare that I forgot to pay the bill or something. So I woke up this morning, came downstairs to my office, paid it off right away. I can't carry debt. I don't know how people could do it. I just can't carry somebody else's money. Can you? Do you feel comfortable carrying someone else's money? Because I don't. Even though the wealth is created out of thin air, even though it's all Ponzi and it's fake, I still don't want it. I want no part of it. Anyways, guys, comment below. Let me know what you guys think down under. Woo! Depositors get nothing. And then when they go cashless in Australia, it's going to be nice when they start bringing the rates into negative territory. Remember that video I said where Australia should be in negative territory for the banks to balance their books? They got to be at negative 7% for Australia to be at par with the amount of garbage that's out there. Yeah. And that's why Australia is the pinnacle of everything. Then New Zealand, then people are arguing with me saying maybe it might be UK before Canada or Canada before UK. I think Canada before UK because UK has been losing steam for the last 27 quarters. So let's see what happens, guys. And then with Brexit happening, it's going to make it even better. Let me know what you guys think. Comment below, and thanks for watching.